even when the market goes down, and why you need a diversified portfolio, because that's what works. I know a lot of people, even a week ago, had such despair that they sold everything. We chose to sell some things that we felt were going to be underperformers, and we decided to own a lot of others, at least keep them. We have a nice position in cash. Some people say it's too large. I'd say by maybe only 1% or 2%, given how much the stock market could still go down once people pick apart the numbers. But there's no doubt about it. Jeff, October was a very weak month in the country. And we're beginning to see the effects of the tightening. And I would argue that it's not necessarily good for all our stocks.
Sure. CPI, a little bit cooler than anticipated. I mean, the numbers are still up significantly year over year.
That's my
up 7.7 versus 7.9 expected, 6.3 versus 6.5 expected. On the core side, used cars down, apparel down. Medical services finally breaks and turns lower.
That was the new one.
Food and shelter still stubbornly high.
Yeah.
But of course, we're going to take this data. Now, yesterday, according to the CME FedWatch tool, we were looking at a 50-50 basis points versus 75 basis points at the December meeting. Now it's looking like 80-20, 50 basis points versus 75. So, of course, this plays into the Fed's hand of wanting to slow rates down, but they still need to tighten. And it's going to take more than 1 month of data.
And my interpretation is that you can buy the 2-year at 4.4, 4.5, because if he's going to fight inflation, he can't fight it as aggressively. So you still get an interesting opportunity. Of course, use that. If you own any Binance, if you have any of these, if you're Binance, Abbott, if you're in any crypto and you're borrowing money, which a lot of people are, you shouldn't be a member of the club, because you should just go to, I don't know. I mean, you could easily go to a very nice casino in the Bahamas and have much better odds, much better odds. Now, I like to count cards. I can tell you, even I would have to say, better odds.
So let's just get into what the market's doing today. Obviously, NASDAQ outperforming. A lot of that has to do with rates, which are plummeting.
Rebound. This is Microsoft, okay? Using that as the paradigmatic name. And the reason why I mentioned Microsoft is that it's a company with a higher multiple that did not do the quarter that we wanted, but was still doing well as a business, just not well enough, whose business will probably get softer because of this month, not stronger, but has a huge dollar exposure. Right. So, in the end, Microsoft, if we could trade it, I would trim some.
Okay. And I would say also, generally speaking, a lot of unprofitable tech stocks are rallying big today. Right. Perhaps not great businesses, struggling with whether it's elongated sales cycles, which we're seeing in software, or perhaps their businesses are not doing well. So opportunity to sell into a nice.
I think
you're probably getting a 10% move in some of those unprofitable stocks. Right. We own profitable companies.
Right. See, this is one where I'm just saying, if we own, we have a lot, I wouldn't mind selling some of that. No, this is way too undervalued. No, this is way too undervalued. See, if these companies announce their layoffs, it's going to be like Meta. Think about this. If they announce a 5% layoff, either one of these, which I think both are possible, the stocks are going to pop. So you can't get rid of them. This shows you what happens when you decide to lay off 11,000 people. Mm-hmm. What you get is a stock that's up this and it was up that yesterday. And that's because that shows that maybe Zuckerberg actually cares. Now, I speak with the company. They frankly didn't care even 2-3 weeks ago. They couldn't believe what happened to the quarter after. But there's no cut in the spending for the metaverse itself. And so far, that's produced no dividends whatsoever. Mm-hmm. So I understand if someone wants to sell it. And that's the worst performing stock the S&P 500. I don't have any desire, but you have to understand there'll be a lot of tax loss selling in the name.
Yep. Now, so today's moves in these stocks, a lot of it has to do with price to earnings, multiple expansion. Right. Rates go down, valuations go higher. We've seen the inverse of that play out all throughout the year. But now if it's a company with earnings risk, maybe you want to approach something like that a little bit differently.
Right. Okay, so let's deal with this. Now, I say own, don't trade. And that was because it was at 134 yesterday at one point. Now, if you're sick and tired of the roller coaster of Apple, sell some. Sell some right now. I say that because this stock is going to be subject to more rumors than any other stock about why it's too high over the course of the next 48 hours. And I'm beaten down by it. Now, I never do emotional things like sell because I'm beaten down. But I'm just saying, I'm beaten down by the people who tell me, Jim, this one is the big vulnerable stock in your portfolio. I refuse to believe that because I'm a big believer that they have a serious, they are the greatest consumer tech company of our generation. But I urge people who are fair weather friends, some sunshine soldiers, get out of your Apple, okay? Because I'm tired of hearing from you that you can't take it.
But you wouldn't necessarily trim like a Procter and Gamble, which doesn't really have that earnings risk.
Procter's
Dollar going down is a huge
Procter's
windfall for them.
J&J's to buy. Eli Lilly's up so much. You know, let's just go back.
Yeah, Lilly's up big.
I'm not fed up with our club members. Club members own it. I know I spoke to a number of them just last night. But I'm just saying that people are watching who are not club members who are saying, you know what, they have too much Apple. We're going to own the Apple. We're not going to trade it.
Right.
We're not tempted. I traded Microsoft. Yeah, Microsoft was at 220 the other day. And I'm just saying, okay, I know it's 24 times earnings. I don't have the level of conviction.
Mm-hmm.
Now, we've sold that. That's not.
Yeah.
All right, guys. I just want to interject for a little bit. We will get back to the club in a minute. So just want to talk about crypto a little bit, as he just mentioned crypto. So I didn't want this meeting to go too far. Crypto, I don't do crypto, guys, because I don't understand crypto. So I normally does companies that I understand, companies like Apple, company like Amazon, company like Alphabet. I do Costco. I shop there a lot. So kind of stick with things that you know, trying to stick with things that you use every day. And again, I see a little frustration from Jim Cramer a while ago. Stick with Apple, guys. I stick with Apple for the long term. If you're a long-term investor, and if you're listening to my video, I hope you're a long-term investor, because this is what I do. I'm not a trader, so you wouldn't get any advice from me that will tell you get in and get out. So I just see a little frustration. So I just want to talk a little bit about that. And then he did say Microsoft trim. I'm not totally agreeing with that. I think Microsoft will go higher, just like I think Apple would go higher. So be very, very careful of that. So as you know, they're about to get into some other companies like Eli Lilly and stuff like that. So what I'm going to do right now, I am going to go back to the meeting, guys, but I didn't want to go too far, and then I will come back again at the end of it. So let's just get back to the meeting and hear what they have to say, guys.
J&J is obviously, I think, because of the split, terrific. Eli Lilly's had an amazing run.
Yeah, I believe that's a new all-time high for that, for Eli Lilly.
Eli Lilly's got perhaps the greatest drug of all time, one that many of us are trying to get, which is the weight loss drug. So, I mean, these all work. Procter works. But what doesn't work, unfortunately, we have paired them or gotten rid of them, are the very high multiple techs that you mentioned.
Yeah.
So now let me just give you something else that I really like. I want to talk about TJX for a second.
Sure.
TJX is the biggest beneficiary of the line item in the CPI, which says apparel has come down. And that's because the Kohl's of the world are selling their apparel for next to nothing to TJ. Now, TJ, if you look at this, is finally back to where it was when it was too high. Yeah. But it's such a better company right here. That one works. And that works because if you look at the CPI, apparel has fallen so much. That's just the stores dumping it. And the only real buyer is not Burlington, is not Ross, but it's TJ.
And of course, Gordon Haskett, they upgraded their rating on TJX Tool Buy this morning, $80 price target. They say they think they're finally really going to see this trade down into the off-price retailers. Again, of course, that's where you can get the best deals on some high-quality merchandise at off-price, which they buy from using Kohl's as an example.
Do I like to buy up 3? No, I maybe be up 2 later date. Now, let me give you another one, Constellation Brands. This is when we finally get that the sand stock is now just 1-for-1 with the regular.
Right.
Now here, of course, I love that reverse Head and Shoulders. This company has got the most cash flow. I was dealing with these guys recently. I was at a conference for alcohol because my wife's mezcal company. And what kept coming up? Constellation is the company with the single best cash flow in the world of any drink company, both alcohol and otherwise. And yet, look at it. It's down 1.8 for the year. Yep. If you put a PepsiCo's up huge for the year. So I think that this is a really interesting level to get long the stock. Do I care that it's up 6? You buy some, then you buy some.
Yeah.
But this has an event that really is quite neat.
Yeah, of course, this elimination of that Beeline, which was owned predominantly by the Sands family. Constellation, they've really cleaned up their corporate governance structure. Gone are going to be the days where they made these horrible deals. Instead, they're going to invest. They should invest more in their beer business, and also perhaps buy more stock when they can. Of course, you mentioned the great cash flow, but this elimination because it does enhance corporate governance, you should see the price to multiple expand over time.
Right, and that's what will happen. The cash flow is greater. I feel great confidence. And then one last one. Coterra, I was up last night working on it again. They have the lowest. Tapit Oil and Gas was the lowest producer of natural gas in the country. Cimarex was an amazing producer in Permian. This stock is down very big. Yield?
Around 10% right here, as of yesterday's close.
For the 10-year? 4%. This thing, numbers are probably too low. There was a SEC accounting issue that they did not explain well enough. It had to do with how you value wells that you have not drawn. Their natural gas is the one that's going to go to Europe in order to be able to, if it's a cold winter, believe me, it goes to Europe. And this is a gift because the biggest worry I had was the 10-year was going to go to 6. And people were going to say, what do I need this thing for? And buy Coterra.
And very quickly on Wynn Resorts, they reported earnings last night. Vegas doing incredibly well, Boston as well. But of course, Macau still being hampered by those COVID-19 restrictions.
But Tillman's there.
Yeah, Tillman Fertitta, about 6% stake. They didn't really say much about it other than the fact that they think it's recognition of the value of the company's equity.
U.S. equity.
Yeah, of course. But we said maybe we'd sell if it was up 10%, up 6% now.
If China opens, it goes to 100.
Right.
If Tillman may be buying it ahead of that. One other we discussed was Morgan Stanley. That it was at 84, and I said, well, geez, I don't know. It's finally up from the 70s. Then I realized, come on, this may turn the whole business around.
Good div.
Morgan Stanley's good. I've spoke with 2 different bankers today. I'm going over to Goldman Sachs right now, and I figure that don't sell that. That can go to 92, 93. So lots in flux. I just want to reiterate a couple things. One, if you're in one of these exchanges in crypto, and you're borrowing money, you most likely will be wiped out. And that's a terrible thing. And I've been wiped out in my career. Unfortunately, I was young in my career. But otherwise, we have a lot of good options and a lot of good things to be talked about. And if you're looking for things to buy, I think we provided you a great list, which includes Constellation, which I think is absolutely terrific. I do like Procter & Gamble very much. It's well below our basis. I think that's a terrific situation. And then my favorite, based on the CPI, is TJX because the apparel has come down a great deal. I'm Jim.
Anyway, guys, I just want to get in here and talk to you about what Jim Cramer. So Jim Cramer is one of the better guys. I love listening to him. So kind of take his advice. I said, crypto, be very careful of crypto. I hope if you're in crypto, you don't get wiped out because it's a hard thing because I use margin to buy stocks and I know how hard this could be. But I don't know if you guys are following the news that Putin is pulling out of Ukraine, at least withdrawing, we hope so. Things could be better for the oil stock. So think about Coterra. I think it says $26. If you don't have a lot of funds to buy, you could get into Coterra very easy. Or you could do PXD, which is Pioneer Natural Resources. I am in there. And then he did talk briefly about Lilly, Johnson & Johnson, and Constellation Brands. I said, just be careful. I think Eli Lilly is gotten too far and too big. I would not advise you to get in there. You have to wait for a pullback. You can buy things up 6. But today, the stock market is very green. It is a very, very good day. So Constellation Brands, I wouldn't be buying any stocks right now. I know he says buy stuff and buy some. I don't agree with that. I think you should wait for a pullback before you buy. So some stocks to look at. Microsoft, we're looking at Apple, Eli Lilly, Johnson & Johnson, TJX, and PXD, Pioneer Natural Resources, which are going to get some because that's a 15% dividend. They give a fixed and a variable dividend. Hey guys, well, sorry for starting a little bit late today, but I had to do a lot of work on my Patreon, guys. So Patreon is where they get a lot of stuff, a lot of newsletters and a lot of videos. So if you're not there, consider joining. But anyway, guys, I'll see you on our next video. If you're watching for the first time, thank you. And please don't forget to comment and subscribe. And I'll see you tomorrow. Might be a little late again, according to how much information we have to do on our Patreon account. Anyway, guys, thank you for watching the video. See you tomorrow.